Hello and welcome to another update video about ADA. So ADA is currently here probably following a bit of a triangle pattern there. We talked about this triangle pattern in the last few videos. Still not convinced of the triangle, so it might break out more directly. There is not much space, but as long as we are holding below this B wave top that was made at around 41 cents, I'm watching for a triangle. Okay, so for anybody who's new on this channel and if you're wondering how this pattern here is filling in and what the expectations are, well, there are basically two wave counts. So when we look at the bigger picture, the assumption is currently that we are filling in here a diagonal pattern. Okay, so we are likely, or at least we're observing, if it's filling in here this 5-wave move, 1, 2, 3, 4, 5. Okay, that's sort of what we would like to see. That's not per se bullish. Okay, I explained in previous videos very extensively that this 5-wave move could only be part of a larger corrective rally, which would then lead to another bear market low. Okay, so the risk of another bear market low, because I did receive quite a few questions in the last few days about, okay, is it still possible for ADA to get to, I don't know, 25, 15 cents? And I mean, the answer has to be yes, of course. You know, whenever you ask if something is possible, my answer will not be very helpful because, of course, anything is possible in financial markets. But what is probable? And yeah, even after these 5 waves are filled in, we will not be able to rule out a new bear market low. It will literally depend on the move down after all these 5 waves are complete. If it's a corrective pullback and we are holding a higher low, then it is likely a so-called 1-2 setup. So this wave 5 or this 5-wave move will be considered a larger degree wave 1, and the pullback would be a wave 2 if it's going to be able to hold that support area that we will then be able to define for you. However, if the move down afterwards is going to be in 5 waves, 1, 2, 3, 4, 5, well, then it can take us down to 20, 15 cents maybe. Now, we first of all need the high in place to be able to calculate really the target to the downside. There will be a bullish and a bearish scenario. It's not very clear on the ADA chart. So as I said to you a while ago, we will not be able to rule out another bear market low until we can see 5 waves up and 3 waves down. But if we get a pullback after these 5 waves are done, we might have an interesting trade setup, an interesting long trade setup. Also, towards the end of these 5 waves, we might have an interesting short trade setup. So because nobody's got the crystal ball, right? But it's all about how we can strategically position ourselves. So if someone, for example, is looking for a bit of a hedge there, or you want to profit from both scenarios, you could enter a short trade towards the end of these 5 waves, and then looking at scaling into a support area for a potential long trade while leaving your short open, taking some partial profits. But in case the support area breaks, it can take us down to around about 15 to 20 cents, and you can profit both ways. So you see, it's not so much about knowing what's going to happen, because nobody knows. It's about understanding the likely scenarios and then strategic positioning oneself. We also had a long trade setup here a few days ago, and that support area was triggered twice. It generated 2 profitable trades for anybody who used this box. It actually moved up quite nicely after hitting these or this support area. The thing is, though, it's not entirely clear yet if we have started the next wave up or not. So we need to break above the most recent high at 41 cents for that. But what I wanted to explain actually, before this became quite a long explanation, that we are likely in this 3rd wave. At least we're tracking that. And that assumption is valid as long as we're holding 26.4 cents. Below that level, I have to look for something else, something more directly bearish, okay? But until that's the case, we are focusing here on higher because, as long as the market is following our scenario, there's no need to change it. We have in the yellow count the idea that the A wave, so the 3rd wave is an ABC structure, and this is probably still the A wave, that the A wave consists of 5 waves. What you need to know, in Elliott wave, an A wave can be a 3-wave move, an A wave can be a 5-wave move. Both is possible. So we are tracking currently a potential 5-wave move in which either wave 4 of A is a triangle in gray, or it could turn into an ABC structure, but then we would need to come down into the orange support area again. So I specifically made you aware of this potential triangle and a more direct continuation higher last week. Either way, it's not so important to know how a correction is unfolding. What the question always needs to be, okay, where is support? And this was the support area, and the price generated a response already twice. I think what the wave count allows us to understand is that it's still possible that we make another higher low in the triangle before breaking out, or even that we dip into the orange support area again. And support of the yellow count is 29 cents. And okay, if we break below that, then we have some clarity that we're likely in the B wave already. And in that scenario, the A wave only completed 3 waves, which is possible as well. An A wave can also just be a 3-wave move, but it's leaning, it's sort of adhering better to the concept of A as 5 waves. Just the microstructure works a bit better. And also this triangle pattern seems to work, but I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.